Hi, good evening to all. Today we are going to look at an important topic of banking theory. Today's topic is the qualitative credit control measures of RBI, or we can say it as the qualitative instruments now of RBI, or the selective method or qualitative method. It has so many names. These methods are adopted by the RBI in its pursuit of economic stabilization and as part of the credit management. In an economy, there are two conditions. One is inflation and the second one is deflation. For that time, the RBI regulates regulates over commercial banks to control the credit. For which RBI uses two methods. One is the quantitative method and another one is the qualitative method. Under quantitative method, they use so many instruments as bank rate, CRR and SLR, and repo rate, reverse repo rate, and open market operations. These instruments used in the term of the quantitative, whereas in qualitative method, the RBI uses some instruments such as margin requirements and the credit rationing and the regulation of a consumer the credit, and one more is moral suasion. The first instrument is margin requirements. Margin requirements against specific securities are determined by the central bank. This instrument uses commercial bank usually provides loans on securities or the collateral. If they will provide 80 lakh loan to the customer, that time they will get security as now 1 crore. The difference between 1 crore and the 80 lakh as the 20 lakh is the marginal requirements. A change in margin requirements will influence the flow of credit. Here is the change is 20 lakh. That is the margin requirements. A rise in the margin requirement results in a contraction in the borrowing value of the security. Why is it so? If the margin requirement rises, the money supply decreases. So bank provided the less amount of loan to the public, to the customer. A fall in the margin requirement results in expansion in the borrowing value of the security. It is vice versa of the above point. If a margin requirement falls, the money supply increases automatically. So in our economic deflation will be corrected. The next instrument is a credit rationing. It is a method by which RBI seeks to limit the maximum amount of loans and advances, and also fix the ceiling for the specific categories of loans and the advances. RBI instructs commercial banks to give the credit on a specific segment, specific categories of the people, for which people for for how many amount of loans will be provided. The instructions will be given by RBI to the commercial banks. It is a kind of quota method. The next one is regulation of a consumer credit. It is designed to check the flow of credit for consumer durable goods. Whenever commercial bank provides loans to consumer, especially in trader, that time they will follow these controls. This can be done by regulating the total volume of credit that may be extended for purchasing specific durable goods, and regulating the number of installments through which such loan can be spread. Here is the important words as goods and the commercial bank give certain installments whenever they give the loans to the consumers. RBI uses this method to restrict or liberalize loan conditions accordingly to stabilize the economy. To meet the deflation or inflation in the economy. So RBI that time the RBI uses this method to control the credit. The next one is moral suasion or the credit monitoring arrangement. They are other methods of credit control. Moral suasion means the RBI has a lot of power over the commercial banks. So it is requesting or advising or the directing to the commercial banks to follow certain norms and regulations. If they don't follow it correctly, that time they will take action. The RBI will take action against the commercial banks. The policy of moral suasion will succeed only if the RBI is strong enough to influence the commercial banks to fall in line with its policy regarding credit. Commercial bank fails to follow the RBI rules, that the RBI instructs the commercial banks to follow certain rules. It is relevant to the moral behavior of commercial banks. The next one is publicity. It is another method whereby the RBI makes direct appeal to the public and publishes the data which will have the sobering effect on other banks and the commercial circles. It is now RBI publishes the data of commercial banks to the public about the operations of the credit management. Thank you. We will see you again with another session. Until then, stay tuned, stay blessed. Bye.